By now, you've probably heard the news of the issues in Iran and the U.S. and Israel getting involved, and kind of the concern over uranium enrichment and all the different geopolitical activities kind of that are following along with this story. So we wanted to just address it briefly and kind of talk about things as it relates to this situation. So geopolitical risks historically create sharp volatility, but they're usually not very long lived. And in this situation, the president's talking about, hopefully a number of weeks before the situation resolves and is over. Obviously, it could go longer too, with some remarks that are made. But in general, that's kind of the market's response is usually volatility, but potentially short-lived. I think the issues here, right, and we're seeing it in energy markets. That's the major concern the markets have. Energy prices have risen pretty dramatically. About 20% of the oil flows through that region in the Strait of Hormuz. So that's a potential issue that's being assessed. Now, the initial damage, right, in terms of what's been lost is not meaningful. It's if this continues and oil can't make its way through that strait and the supply chain is disrupted. So that could, cause some inflationary issues along the line. And I think in general, this kind of does just bring the general concern of inflation back. So, how do we think about this as it relates to our portfolios and our investment thesis? And I would always say to clients is that we're never building a portfolio for short-term events. We're building a portfolio for longevity. We're building portfolios that can live through the ups and downs of markets and events like this. And so while this is concerning and something we absolutely are paying attention to, it's also something that we've planned for, in the last 10, 15, 20 years of our existence to figure out how do we invest correctly, for the long term. So key points, right? Diversification. We own stocks, we own bonds, we have cash, potentially real estate in the portfolio. So not being too concentrated in any one area. We're seeing, interest rates and bonds, hold up very well through this period of uncertainty, which makes sense, right? So I think that's really what we have to think about. The other part of it too is that we've seen a really big we've seen a nice move up in the markets over the last couple of years. You can even argue the last decade. And so, as the markets are cooling off with geopolitical events, sometimes that's a reason for a little correction amid an overall healthy market. Earnings has been fine. In good shape. The underlying economy seems pretty strong. We've got this AI theme that everyone's kind of trying to wrestle through and determine, how does AI fit and what are all the different things that are going to shift and adjust. So we've made some changes along that line, favoring a little more value over growth. But all in all, we continue to come back and say we've planned for this. We've planned for it with cash and liquidity in your portfolio. We've planned for it from an income perspective. So really just a message here to kind of give you some of our thoughts on the situation, but also reiterate the fact that we do believe we're in a good situation in how we've allocated no matter what happens in market situations. So I hope this is helpful for you. As always, in times of volatility and concern, this is really where we look to step up for you. So if you need a phone call, you need a meeting, just to reiterate some of this or look specifically at what your portfolio and how it has responded, please take the opportunity to reach out to your wealth coach and have that conversation. We're here to help you feel good about your money. And so if you're not feeling that way in times of volatility, let us help. So thanks for your time today, and we look forward to connecting soon.